Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
I'm Ira Dul. Let's get straight to the headlines. Indian markets failed to hold on to record levels hit in opening trade as banks and oil marketing companies drag.
US President Donald Trump denies knowing about the election campaign fund being used as hush money to pay off women who had alleged affairs with him.
Saudi Aramco's IPO has been put on hold indefinitely as the focus shifts to its stake buy in Saudi Arabia's largest chemical company.
And Arun Jaitley is back at the finance ministry after a 3-month hiatus.
All right, we'll step in and look at the markets first. Neeraj is here with us as always. Afternoon, Neeraj.
Hey, afternoon, guys. So banks putting pressure. That's the texture of the trading day today. Frankly, if you just look at what the indices are doing, the three indices, Nifty, Sensex and the Nifty Bank, you'll see the Nifty Bank being the principal culprit, as a result of which the gains logged in by exporters are not being witnessed on the benchmark index levels. So let's first look at the pressure points. I mean, Bank Nifty, within that, the likes of Kotak Bank, SBI are under pressure. Kotak Bank continues to grind lower now. Post the June series, the start of the July series onwards, Kotak Bank is down about 8%, is the top loser since the time. The markets have gained about 9.5%. Kotak Bank has lost about 8%. That's a 17% underperformance for Kotak Bank versus the Nifty benchmark, not the Nifty Bank, but still. And what that plus the losses into the oil marketing companies, presumably because of one, the 5-day uptick in crude prices and the downtick in the rupee as well. Oil marketing companies are down in the session today, BP, HP, IOC, and conversely, you have the exporters by and large doing well. So IT and pharma, both of them today, whether around it's a Cipla which has got a lower export share or some of the others which have got a higher export share, the likes of Lupin, all of them have done very well. So exporters by and large doing okay. Seen in the broader end of the spectrum, a lot more stock specific as usually would be the case. Yes, PSU banks are down today, but aside of that, specific pockets, Pratap Snacks, that acquisition in the state of Gujarat, which gives them the access to Gujarat, makes the stock move up 14% in the session today. Really smart move that came in on that stock. Pharma by and large seems to be doing okay. Zensar Tech from amongst the exporting names also doing reasonably well for itself. ITI got that order and that stock is up about 7 or 8% in trade. So good going. And last but not the least, guys, we're talking about how expensive stocks are finding favor. And look at what's happened to a Dabur, look at what's happened to a Nestle. Strong commentary from the management is all that is needed to take these stocks higher. So valuations notwithstanding, Nestle India is up another 6% now, 11,500. Dabur India is up about 5% in trade. Bata is at record highs. So consumption stocks certainly ruling the roost today.
Neeraj, thank you for that. With benchmark indices trading at near record highs, several stocks are also riding the wave. As Neeraj was just pointing out, a number of stocks are trading at the highest point in at least 52 weeks. What does that do to valuations? Yash is standing by with some math.
Good afternoon, Harsha. So essentially what we've done is we've taken a list of stocks which as of Tuesday's closing had hit a fresh 52-week high or record high and narrowed it down by adding the market cap filter of 10,000 crores and above, and that has left us with a universe of 17 stocks. Now, no surprise here, that list is absolutely dominated by FMCG with 8 out of the 17 names being from the FMCG basket, and we'll talk more about that in detail. So which are these stocks? Well, it's the Britannias, the Dabur, the ITCs, Bata of the world, which are topping the charts. So Britannia at about 67 times it's the most expensive stock in this segment, trading at a premium of about 36% to its 5-year average PE of 49 times. Something like a Berger Paints at 58 times. It is the most expensive paint stock, more expensive than even Asian Paints. Havells and Dabur trading at about more than 50 times. And the one stock that I'd like to highlight is ITC. That is trading at about 31 times its FY19 estimated PE, which is in fact at a discount to its 5-year average. But moving forward, the IT stocks, they make up for the second largest chunk of this segment, and there are 3 names: Infibeam, InfoEdge, and L&T Infotech, and that's the one to watch out for, as strong growth across all of its key verticals, large deal wins, and the healthy margins expansion. All of that comes at a price, and that is at 24 times the most expensive stock, by the way, on this entire list of 17 stocks, trading at a 37% premium over its 2-year average. The other 2 names, Infibeam and Info Edge, well, it need not necessarily be comparable to its previous year averages, but going forward, the analysts are expecting the improvement in the profitability. Also moving forward is the pharma pack, and that's the most interesting one, because both Sun Pharma and Divi's, which in fact has given the highest return than any other pharma counter over the last 12 months, is trading at about 30 times, is at a discount, by the way, of about 12%. Something like a Sun Pharma at 36 times as well is at a discount to its 5-year average PE of 41 times. So pharma is one pack which seems to offer value as far as valuations are concerned. In terms of financials, there are only two names, Axis Bank and RBL Bank, both of whom have hit fresh 52 weeks high, but well, they continue to be relatively inexpensive as compared to the other names that we've seen. So about 2.4 times for Axis Bank and 3.4 times for RBL Bank, not the most expensive, but we've left the big boys for the end. So Reliance Industries, well, that's trading at what, about 17.5 times. The strong rally in Reliance Industries has seen it become only the second $100 billion market cap company in India just last month, aided by its telecom arm Reliance Jio turning profitable, and also the sustained growth momentum in its core business, which is the petrochem and refining business. But at 17.5 times, it's the most expensive that it has ever been. In fact, it's even 2 standard deviations above from its averages. And well, Amara Raja Batteries, it's been an underperformer over the last 3 years, if you could say, giving negative returns. So what that's done is that's pulled down the 5-year average PE to about 30 times, and well, it's relatively inexpensive as compared to the other names.
All right, thanks so much for that. Fund flows in equity funds fund flows into equity funds have shot up in July, and this is despite rising crude prices and the threat of a global trade war. Let's get across to Yatin Mota, who's giving us a sense of what asset managers bought and sold last month. Yatin.
Well, the month of July has been record in sorts. If you look at the equity AUM, clearly at a record high, 10.45 lakh crore is what the equity schemes are currently having in terms of the asset under management. And more importantly, the SIPs, which is the systematic investment plans, are doing extremely well. This month also has been a record. So we have almost 7,554 crores flowing into the month of July alone. When it comes to the SIP plans, in terms of the investing in the market. Of course, we will also talk about what are the, contours, in terms of the leadership position. HDFC AMC clearly remains the largest in terms of the equity fund management. And also if you look at the top 10 AMCs, we have top 10 AMC controlling nearly 81% of the market share. Of course, this was a concern according to the regulator. They are, finding ways and means as to how really does the concentration of assets really moves in the right direction moving forward, which means that more diversification is required. But that apart, we have the domestic mutual funds which have been on a buying spree, given the fact that there has been a good earning season, plus the kind of inflows and money that they are sitting on. In terms of the top large cap buys, we have Dabur India, wherein the exposure has been increased by nearly a crore shares. 17% is the growth month on month in terms of number of shares which the asset managers have bought in. Of course, the values could be higher given the fact that the shares have appreciated. In fact, Dabur has hit a record high in trade today. RBL Bank, nearly 16% is the kind of exposure which has been increased by the domestic mutual funds. And similar is the case with Lupin, Havells, Bajaj Auto. Remember, these are all the beaten down names. They have seen some good buying from the recent lows, and almost a double-digit kind of an increase in exposure is what we have seen versus the total number of shares for the month of July from the domestic institutional investors. However, on the flip side, we have Indiabull Housing Finance and HTL Technologies, wherein the exposure has been cut significantly by the domestic mutual funds. Of course, Asian Paints is a surprise, wherein domestic mutual funds after quite some time have reduced exposure. The current holding now stands at 2.62 crores as of July 31st. Also, we have Coal India as well as ICICI Lombard. Both of these stocks have been underperforming the markets for quite some time now. So almost 8-7% kind of a decline in holding to the number of shares on a month basis we have seen for both of these companies. But clearly, mid-cap is the flavor of the season. A lot of mid-caps is wherein domestic mutual funds have bought. But as of now, the flows seems to be unstoppable as the equity cult in India, is setting records every month.
Ratan, thank you for that. Morgan Stanley, meanwhile, remains bullish on India even as it turns cautious on emerging markets. Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley, attributes it to a cyclical pickup in the business cycle coupled with rising earnings expectations. Listen into why he's still overweight on India.
If we look at the rally, it really peaked out as long ago as the end of January, and the MSCI EM index is down around 20% from the peak. So it's on the cusp of entering a bear market, and our new target price indicates, if we're correct, that it'll fall another 8% by June of next year. So that would make a peak to trough move of almost 30%. Now, we saw something larger than that as recently as 2015-16, and we saw something again around about 35% decline in 2011. So if you look at what caused those prior bear markets, we think we see something really quite similar today. So we see a significant slowdown in the global economy outside of the US, particularly in China and in North Asia. We see a decline in commodity prices, most notably copper, which always correlates well with EM on the downside. We are coming off very high valuations. So at the end of January, we were trading almost 14 times forward PE for EM, which is the 95th percentile of the long run range. So we have negative macro catalysts, a market that was quite overvalued. If we're right, earnings estimates are going to need to come down. They've already started to fall, but they have materially further to fall. And though this has been a bear trend since the end of January, it's only around 7 months old, and that's a little short to think that this is going to come to an end anytime soon.
Since you were talking about valuations for the Asia emerging market basket, for that matter, if you look at the 12-month forward price to earnings, India seems to be the most expensive and stretched out at this point in time, but that doesn't seem to be stopping the kind of rally that we've been seeing in the markets. Do you see that as a problem?
Well, we're overweight India, whereas, for example, we're underweight a market like Korea that's underperformed India substantially. I think the key point about India is that it's a very different stage of the business cycle from particularly the markets in North Asia. So India had an extremely weak economic environment really through the demonetization and GST reforms and then the fiscal tightening that was being done. Now you're getting a cyclical pickup. And that's allowing the market's earnings profile, I guess, to move forward. And whereas earnings expectations are coming down in other markets, particularly the more trade and global economic sensitive markets and sectors like autos and tech hardware across Asia, we're not seeing that in India. So we are actually able to recommend to clients consumer discretionary and capital goods stocks in India, which we're not recommending in the broader region. India is also not that exposed to global trade. It's somewhat exposed to oil and somewhat exposed to some of the developments that are going on in relation to sovereign risk elsewhere in the asset class. So we have had a couple of rate hikes in India. But our overall judgment is that India is a sufficiently strong macro and micro story now to justify an overweight. And as you say, it has outperformed.
Overall, from a foreign fund flow point of view, emerging markets and the emerging market Asia basket as a whole has been seeing thin flows over the recent past. Not too much in terms of the money allocation or the equity allocation is coming this way. Do you see that changing anytime soon?
Well, we track weekly all flows to and from emerging equity markets, and recently we have had some quite large outflows, totaling over $20 billion in the last, 3 months or so. However, prior to that, we had a period of very strong, near euphoric inflows that ended at the end of January when the market peaked. Now, only around 20% of the money that came in last year and the first month of this year has left as of now. And our judgment is both on the equity and the debt side, it's likely that the recent trend to outflows continues. And that's one of the reasons we think we have further downside in the markets here.
All right, let's move to the political economy. Arun Jaitley has resumed office at the Finance Ministry today after a 3-month hiatus on account of bad health. The leader has been working under a controlled environment after a kidney transplant. The president reassigned the Finance and Corporate Affairs Ministry to Jaitley earlier in the morning. Piyush Goyal had been the acting interim finance minister in Jaitley's absence.
SEBI Chairman Ajay Tyagi has cautioned mutual fund houses today against related party transactions. Tyagi, who was speaking at an event at the AMFI event, said recent reports suggesting that ICICI Prudential had bailed out ICICI Securities IPO and HDFC AMC had distributed shares to mutual fund dealers are worrying, and that the market regulator will be more vigilant in the future.
What we have been trying to do, and through FSDC, we've been trying to argue is that there should be similar stewardship code for insurance and pension industry too. So I compliment mutual fund industry to play that role, and that is established over a period of time. But I agree that in recent past, some of the instances which came to a light were in fact very saddened us the way they happened, and we will be vigilant. I just want to assure you that we will be vigilant towards such incidents, and we will intervene as quickly as possible if that happens. And hopefully people should understand and gain the maturity not to repeat those type of incidents. But in case the industry is not disciplined and they are not doing their job, then certainly SEBI will do.
All right, let's move into global news. The U.S. Federal Reserve has reiterated its concerns on the imminent trade war that could pose a threat to the U.S. recovery, but that hasn't dissuaded them from sticking to the Fed rate hike projected in September. Bloomberg's Matthew Bossler reports.
Fed officials said at their last meeting that it would likely soon be appropriate to raise interest rates again, and that of course probably means when they meet again in mid-September. They also mentioned a lot of confidence in the inflation outlook. They are confident that it'll stay close to their 2% target over the medium term, and also a little bit more confidence that wage growth will soon accelerate as well. Low unemployment was mentioned as a reason for that, and the lags in the time it takes from low unemployment to translate into higher wage growth. And so that's another thing that they see as supporting the inflation outlook. Trade was mentioned by all participants at the meeting as a downside risk, although they sounded a little bit less concerned about that at their most recent meeting than they did at the meeting before. One new downside risk that they mentioned was the possibility that fiscal stimulus might not have as big of a boost to the economy as they previously expected, and so that was a notable new addition. The chairman specifically said in the minutes that it would probably soon be appropriate to resume a discussion about where they're going to take their balance sheet in the longer term. That's something they said to look out for in the fall. And the question about what to do with interest rates next year once they reach that sort of neutral level for interest rates was a bit glossed over, but it was hinted at that it's going to be a bit of a communication challenge once they get to that point next year, because a lot of different officials have different estimates for where that neutral rate is, and so it might be a little difficult for them to describe policy as accommodative in the statement or as restrictive the way they've been doing.
All right, let's move on. The U.S. president finds himself in a corner now that two of his closest associates have owned up or have been found guilty of misusing campaign funds. President Trump since then has denied involvement, but all of this puts him and the Republican Party in a very messy situation just before the November midterm polls, that is. Jody Schneider of Bloomberg News now joins us with more details on this one. Jody, it's getting increasingly difficult, isn't it? President Trump finding himself on a sticky wicket?
Yes, this is getting to be a more complicated situation. The president came out today and said that that no campaign funds were used in the payments that were made to the women that Michael Cohen talked about in his plea agreement the other day. He also said that he only found out about the payments later. This directly contradicts what Michael Cohen, his former lawyer, said in pleading guilty to these charges in court in Manhattan. He said that he made the payments in coordination with and directly on orders from the candidate, who of course was Donald Trump, the candidate at the time. So this is getting to be a more interesting situation. The president also tweeted that he didn't think anybody who was looking for a good lawyer should not hire Michael Cohen, who was his lawyer for almost 10 years.
Okay, Jody, let's also talk about the tariff war that's going on. The U.S. and China have imposed fresh tariff on each other's goods, even as talks are going on between the two economies. What's the latest on this one?
Well, the latest is that we have another $16 billion in tariffs on both sides that will apply to the products of the other countries, their imports. What's happening is this is a second round of tariffs. We saw $34 billion take effect. The U.S. started it, and China said they would retaliate in kind, and they have. The timing is very interesting, though, because as the tariffs take effect, as things seem to heat up in terms of the trade tensions, there are trade talks between the two sides occurring in Washington. China has sent sort of a mid-level delegation headed by a vice commerce minister, and the U.S. has the same same level of delegation led by an undersecretary for the Treasury. The thinking is that these talks may allow the tensions to stop simmering quite so much, kind of tone things down, have a truce perhaps before they can start more serious talks that could lead to an actual agreement. President Trump himself didn't seem all that enthusiastic or optimistic about the outcome, saying that he'd wait and see, but that he didn't necessarily know that this particular round of talks was going to go anywhere. But they are talking. They're in Washington talking now, both sides.
Jody Schneider, we leave it there. Thank you so much indeed for joining us. Jody Schneider reporting from Hong Kong.
The United States has also imposed a 50% anti-dumping duty on Indian metal pipes. Remember, this comes not long after they imposed up to 541% tariff on large diameter welded pipes from India. The Trump administration is yet to clarify whether the import duty announced today is over and above that or not. Nikki Mirchandani is standing by with the possible impact this could have on Indian companies. Nikki.
Thanks, Ira. I'm going to start off with the basics, where US has announced an hefty preliminary anti-dumping duty on the large diameter welded pipes. The duty has been levied on India, China and 4 other countries. India has been slapped with an anti-dumping duty of more than 50%, roughly 51%. The department, however, is expected to make a final ruling on this decision in November. Duties could be refunded if the independent ITC, that's the International Trade Commission, finds an unharmed state of affairs for these US industries with regards to the imports. Notably, as you just mentioned, the duty comes right after US government imposed up to 540% duty on large diameter welded pipes in India from June this year. What analysts suggest is few stocks that are expected to react or have been reacting to this development are Jindal Saw, Man Industries, Bhushan Steel and Welspun Corp, which are exporting large diameters welded pipes. The analysts, however, do not see any kind of negative impact of this development, sentimental impact though, but then it's going to be a positive one for Welspun Corp, given that the company already has 2 plants in US with a combined capacity of more than 55,000 tons per annum. Also, in the last interview that we held with Welspun Corp, the management actually said that any duties imposed with regards to the imports in US is actually a positive for the company, given that the receding imports of US would lead to higher utilization and margin spreads for US plant. With this, the company expects higher volume and also a 80 to 85% of utilization level as compared to 40-45% level that was seen in FY18. Reacting to this, we have also seen the stock rising as much as 9% up in trade today.
Nikki, thank you for that. Let's talk about Saudi Aramco's IPO that's been put on hold indefinitely. Sources have told Bloomberg News that the world's largest IPO will happen only after the company has bought a strategic stake in chemical giant SABIC. Will Kennedy of Bloomberg News reports.
It's been sort of semi in the deep freeze for a while because there's always been this issue about valuation. The Crown, for instance, said that the company is worth $2 trillion, and it's been clear for some time that investors haven't seen it as at quite that, maybe somewhere closer to $1 trillion. So that's been one obstacle. What's happened more recently, perhaps relatedly, is that Saudi Arabia has decided that Saudi Aramco should buy SABIC, the giant chemicals company. That's a $70 billion deal, and what the statement from Khalid Afallah said last night was the important thing for Aramco right now is to do that deal. That's a huge deal, $70 billion. They need to get that out of the way before they can think about going back to the IPO. SABIC is owned by the Sovereign Wealth Fund. So one of the aims of the IPO was always to channel a huge amount of money into Saudi Arabia's Sovereign Wealth Fund to to redirect that capital towards non-oil things. Now, one way to see the SABIC deal is to do that by different means. Saudi Aramco will pay $70 billion to the Sovereign Wealth Fund for its stake in SABIC, and that gives the Sovereign Wealth Fund the money by different means. So to get that done, Saudi Aramco has to find the money. One way it's likely to do that, we understand from our reporting, is to do a gigantic bond issue, tens of billions of dollars. So that in itself is a huge piece of work. And they need to get that done before they can think about doing the IPO. One interesting angle to that is, of course, that doing that massive bond issue will in some ways deliver the transparency that was always one of the aims of the IPO. They will have to communicate a lot to international bond investors about what the company is doing. They'll have to be a lot more open about results. So in a sense, this whole new plan achieves some of the aims of the IPO in terms of transparency, in terms of delivering the cash without confronting the valuation issue head on.
All right, we'll step into a quick break. Up next, the latest IPO on the street. We'll talk about that.
Back on lunch, the headlines at this hour. Markets failed to hold on to record levels hit in the opening trade as banks and oil marketing companies dragged.
Liberty House claims it's willing to spend more than $5 billion in picking up stressed assets in India.
CreditAccess Grameen falls below 400 rupees on debut, listed at 8% discount to its issue price.
And Rohan Bopanna and Divid Sharan have entered the gold medal match of the men's tennis doubles event.
Quick check on how the markets are faring. We're off those record levels and some weakness creeping in, particularly in banking and oil marketing counters. Agam is here with some of those key stocks.
Right, Harsha. So we are seeing some consolidation today, considering we did see some weakness earlier in the day today, but we've seen a little bit of recovery too when it comes to benchmark indices, with both the Sensex and the Nifty trading marginally in the green, largely flattish. The weakness here is coming on the back of the declines that we're seeing in the Nifty banking index, and that's the reason why we're seeing flattish moves on the major indices. But when it comes to some of the key stocks that we're watching out for in today's day of trade, first one is Larsen & Toubro. That's up as much as 3%. Of course, this is after we've had news of the buyback with the finalized details for the buyback as well. Dr. Reddy's is the other one, which is advancing by as much as 2.5%, and NTPC along with the likes of Tech Mahindra. Tech Mahindra, of course, building on the gains that we saw last Tuesday, is in most from strength to strength after we've seen some upgrades coming through for that one. On the losing end, we do have weakness in Tata Motors and Hindalco among those which are looking at losses of well over 3% in today's day of trade. There you have it. That's Hindalco, and a little bit of a weakness in all the OMCs, including BPCL, HPCL, as well as IOC, seeing some weakness. But on the whole, as far as the benchmarks are concerned, we're looking at consolidation, largely range-bound moves.
All right, Agam, thanks for that. CreditAccess Grameen made a tepid debut on Dalal Street. The microfinancier listed at an 8% discount to its issue price. In a conversation with Shraddha Babla earlier today, the company's management said that they have, or they're expecting to see about a 50% credit growth. Listen in.
Our growth has been about 55% in the last 5 years in terms of our portfolio, and about 41% in terms of our customers in the last 5 years, which has been due to the calibrated growth we have been doing in terms of employees, in terms of branch, in terms of expansion to different territories. And that is what the trend we have witnessed with the very, very strong financial performance, with the lowest operating costs, the lowest cost-to-income ratios, and a very good returns. So these were the trend we have been able to generate due to with our entire strong management, professional management team, and our aspiration to grow in a similar fashion. As you know, I will not be able to share the numbers as of now, after 31st March. 31st March, we have delivered 4,975 crores of portfolio and 125 crores of profit with 18.5 million of borrowers.
Right. Sir, but a capital adequacy ratio of 37% definitely seems on the higher side. Assuming you're able to repeat the past growth performance that we have seen over FY14 to FY18, and that could also depress return ratios in the near term. Just trying to understand what kind of capital consumption does a microfinance company have?
So if you look at the past, actually, no, the ROE, if you see, it's more of a mathematical, because our promoter, CreditAccess Asia, continue to inject the capital well in advance, so that every year in March there has been a capital injection to the company. That is where you could see the ROEs looks little lower, whereas if you see the ROA, which is very good continuously, even in the March 18, we are able to deliver more than 2.5% ROA and 125% of profit. This microfinance business is a capital intensive. As I said, the growth trend is about 50+%, which needs capital continuously. So that is where I said this capital, what we raise now, will be sufficient for next 1.5 to 2 years of time. And we normally keep a 20% capital adequacy, which in terms means about 5 times of leverage. Because this business is a capital intensive and it's a business of borrowing from the banks or borrowing from the lenders, we must have the strong capital adequacy always. So this is where we place ourselves not less than 20% of capital adequacy, so that we will have a strong balance sheet, so that we can attract good lending as well as investment, and we can continue to deliver over 20%, which we have been we delivered before, about 4% ROA, which in turn with the capital adequacy of 20%, that can lead to about 20% plus ROE.
Fair enough, sir. And so while, when we spoke the last time, we did discuss that the company's AUM share from the two states of Karnataka and Maharashtra has been coming down from the peak levels. And you did say that you don't see Andhra Pradesh-like situation repeating for microfinance companies. Sir, but the recent floods in Kerala have once again highlighted the need for geographic diversification. So from the current 86% contribution to the AUM that these two states have, how much can we see the share of these two states coming down, say, in the next 3 years?
See, in the last 3 years, our Karnataka has come down from 80% to 55%. And currently, we are already diversified to 8 states and 1 union territory. And the more diversification, if you see granularly, we have to look at the number of districts what we expanded. We moved in the last 4 years from 40 districts to 130 districts in 8 states, which is what we keep expanding in the geography. So that is the key of our business, where keep on adding the districts and keep on expanding the business. And on a risk parameter, we always ensure that not more than 5% of our portfolio will be in any of one single district, which in turn today, more than 75% of our district has less than 1% of our portfolio. This is what we continuously mitigate the risks. Yes, there is an impact in Kerala, which is for the finance industry. There will be some impact, not exclusive for microfinance industry, where we just entered that state with a very few branches. In Karnataka, there is a flood in a couple of districts, which is already reduced. But with the strong customer retention, strong customer loyalty, normally we come back normally, which we have witnessed every time wherever there's a stress in any geography, we are able to, our customers are able to come back strongly within a very short period, because for them, we are the most preferred lender.
Okay, that's CreditAccess IPO. Let's move on. Maruti has just gone ahead and spruced up its most expensive product on offer right now. The country's largest car maker has given the Ciaz a facelift and put in a more powerful engine as it looks to take on heavyweights like the Honda City and Hyundai Verna and the new Toyota Yaris. So will it be enough to get it back onto the top spot? And why is Maruti doing it at this juncture? Yatin is here with some analysis.
Well, Harsha, if you look at Maruti Suzuki, they have been looking at Ciaz. The positioning is in the mid-size sedan segment, wherein in FY18 Ciaz was the market leader, and ever since the product has launched, it has successfully taken over established brands like Honda City in the marketplace. A clearly facelift is something that they required at this point in time. The key features being that they have changed the front grills, they have introduced a fuel-efficient, high horsepower engine, as well as we have seen the LED lights being the key feature of Ciaz. Now, if you look at the domestic volume trend, and if you look at the Ciaz launch here, we have seen a good spike up in volumes, post that, and they have been able to take on to Honda City neck to neck, for the last 5-7 months. Of course, in the last, we had some issues with the sales, given the fact that the market was anticipating that, moving forward, a refreshed version of Ciaz would come in, and probably, the wait is now off. We have the new Ciaz priced, 35 to 45,000 rupees more than the older version of the Ciaz. If you look at the next slide, you will understand, what are the key features, given the fact that, we have the new Yaris in the market, the new City in the market. We have Ciaz, wherein the features have been quite, stronger. In fact, they have a cruise control mechanism, which was not the case earlier, and they have a higher engine capacity now. Earlier, Ciaz had a 1.4 liter engine, which is now 1.5 liter engine, and to your surprise, the fuel efficiency is much higher, despite the fact that the engine is powered 100 cc higher than the older version, and probably this 1.5 liter engine gives better torque, which is better power to the overall car versus the other models and other variants which are available in the marketplace. And finally, if you look at the pricing, it is quite attractive at this point in time, given the fact that the fuel efficiency in the segment is the highest, almost 20% better than the other competing products. The base price variant is also very close to the competition, of course cheaper than the Honda City, and the volumes YTD also have been lower than that of Verna as well as the other variants. But clearly at this point in time, the new variant is expected to get strong order bookings, and the contribution to Maruti's volumes could be in the range of 3 to 4% according to the early analyst expectations.
All right, thanks for that, Yatin. Before we wrap, the latest from the Asian Games, the Indian men's hockey team shattered an 86-year-old record for the most goals scored in a match. They scored 26 goals against hapless Hong Kong in the group stage encounters. In tennis, Ankita Raina won the bronze medal in the women's single, while Rohan Bopanna and Divid Sharan will fight for gold in the men's doubles.
Out of time on this show. Thank you so much for joining us today.